You know, I think any forecasts are data points. They're people's best guess, so we don't put too much emphasis on them one way or the other, but they encompass or add to the big picture that we take a look at. So, yeah, I do think it's something to keep an eye on, and I do think the longer, say, the shutdown goes on, the bigger negative impact it could be. I think we're trying to quantify that. The one byproduct of it that may be a positive is it's likely going to increase the odds that the Fed stays on the sidelines for a while until they can quantify all this, so that may be a positive. But I think we're still trying to figure it out. I mean, obviously, if people can't fly because the airports are shut down, that has major ramifications that weren't clearly outlined in the early stages of the shutdown. And there may be more of these issues, these unintended consequences that show up. So we got to keep an eye on it in terms of managing our portfolio.
I'm glad you mentioned that in terms of the airlines. I mean, we heard Ed Bastian, the CEO of Delta Airlines, on CNBC earlier today saying $25 million impact in the month of January alone. We heard JP Morgan's CEO, Jamie Dimon, address this on the conference call. Leon, does this, as it gets longer and longer, does this become more of a concern, particularly as a money manager? You won't also have access to data that is necessary to judge what the health of the economy is.
So we are late cycle, and this isn't helping. This becomes exponential. So as we go through 800,000 jobs furloughed plus 4 million contractors, the economic effect exacerbates itself. It gets exponential. So we're now looking at potentially 0.1 GDP drop per week. And as this keeps going on, we're in the winter. We could have winter plus that plus Brexit give us either a almost recession quarter or a negative quarter. It's completely possible. So
for the first quarter? For
this quarter, just this quarter. So it takes obviously 2 quarters to get us to a recession. So I'm not saying we're going to have a recession from it.
But even if it, I mean, let's just say it lasted, 6 months and it was 2 quarters, it's not the same thing as saying, okay, we're in recession because the business cycle is ending. It's a temporary factor that should be reversed.
Which could be a nice recession. It could be the bounce recession where we get out of it and it fixes itself. See, the nice thing about the shutdown is a lot of it is reversible, just like a winter. We have a bad winter storm, we have something come in, we have reversibility. So there's some potential reversibility of this. But we are sitting at a confluence of a lot of risks right now between Brexit and shutdown.
What does the shutdown do to the consumer psyche? Even if you're not involved in the shutdown, does it, in a sense, reverberate through the consumer economy?
Clearly it does, because it affects companies, it affects government contractors who are small businesses, but there's the cascade. If I'm laid off from the government, I don't go to the nail salon, I don't go get my hair cut, I don't go buy a new car. There's a whole variety of things. So the cascading effect on the economy, like I said, becomes
multiplier
exponential.
effect.
It's a multiplier effect. And, when we see that multiplier effect take place, it actually works its way through the system faster as it gets worse.